What up, guys? It's February 7th, and let me start by saying that I want to make a change in my videos, and I want to start these videos by saying, what up, investors, instead of what up, guys, okay? If you're watching my videos, you're an investor or you're interested in investing, okay? So you should be treated as such, all right? So what up, investors? It's February 7th, and today we're going to talk on this market alert about what happened today in these markets and sort of what's been going on in the overall macro environment with the indices, okay? Today we saw Jerome Powell give some sort of like very, unofficial interview at the Washington Business Club. The markets were following that very closely. And then we're going to talk a little bit about earnings season, the jobs report from Black Friday, and how it affects the soft landing narrative. So let's go over all that. But before we do, please hit that like button, hit subscribe, and hopefully you learn something from these videos and we have some fun in the meantime. Let's get to it. All right, as usual, we'll start with the numbers today. We have the Dow Jones move today about 0.75% on the day. Pretty nice move. Then we have the S&P moving up 1.29%. Significant move. Puts the forward price to earnings ratio of the S&P at 21, almost 21 times earnings. That's pricey, guys. That's expensive, okay? Usually the market trades at about 16 times earnings. That's a historical average for the S&P. We are paying premiums for stocks that are listed on the S&P 500. I'm thinking more than likely these are your big dog names, your FANG stocks, Tesla, things of that sort, right? Facebook, Amazon, Apple. These stocks have gone higher recently, and that drives that forward price to earnings ratio. And those stocks do command a premium, and they should, because they're big, huge companies that have more money than most countries, okay? So at the same time, we got to watch out for this level because it looks expensive, okay? Now, NASDAQ takes the cake on the day, 1.90. That's the outperformer of the day. Russell 2K up, same, or pretty much same as the Dow Jones, about 0.75%. Then we got the VIX down significantly, almost 4% down on the VIX to 1866. Remember, we do not want to start positions at this level here. We want to wait for the higher volatility points to start positions in stocks, unless you're just growing small positions. That's totally fine if you do want to do small positions. But when we load up is when this is north of 25, maybe even 28, depending on what the rates are. And of course, talking about rates, bond yields here, 4.42 for the 2-year and 3.65 for the 10. Last time we spoke, we were at 3.46 on the 10. So you see that's a significant spike up from about 7 to 10 days ago when we last did an alert. Significant spike. That makes these guys suffer a little bit. It makes bonds more enticing against stocks. Yield curve is inverted. Okay, and then we'll talk about energy. WTI 77.32. Last time we spoke, 80.22. Brent at 83. Last time was 86. That's nice and down. That's what we want to see. Natural gas 260 last time. 316. Again, natural gas, very impressive and shocking drop in the price of natural gas. May be worth looking into some of these gas stocks like a Linde or a Cheniere to put some money in there while the price of gas is cheap. So when and if this kind of spikes back up next winter, depending on what happens with Ukraine and everything, you could make some money there. But of course, it's a little bit of a gamble depending on the macro environment. Okay, now strength of dollar 103. Last time it was 101.90. That's a significant increase. Again, remember, when companies that do business overseas are trying to repatriate their profits, it costs them more, right? It's more expensive to repatriate these profits the higher this number is. Okay, so for companies that do business overseas, we want this number as low as possible, right? Now, in focus, we're still in the middle of earnings season, right? Right in the dead smack middle of it. So it's going to get crazier and crazier since smaller and smaller companies report over time, but with a bigger volume of company reporting over time. We had Jerome Powell today with his interview at the Washington Business Club. And then we have Disney reporting tomorrow. We're going to watch that closely with Corsair, Callaway Golf Brands, and PayPal on Thursday. Okay, these three here reporting on Thursday. And of course, the jobs report, we'll talk a little bit about that. Okay, now a little bit of a new part in my intro here. The Fidelity portfolio, that's our big dog portfolio. On the day, 1.5%. So we outperformed Dow, S&P, not the NASDAQ, but the Russell 2K. Okay, so we almost market performed the NASDAQ at 1.49%. And our monthly or past 30-day performance 20.06%, up $16,300 in our portfolio. We have some top and bottom movers today: Teladoc, Marvell Technology, and DraftKings. Top movers on the day, pretty nice. Okay, most of our account was green for the day. And then we had some bottom performance: Tattooed Chef, blah, hate that stock. Smart Rent and Honest Company down on the day. Smart Rent is one that is a little more volatile, so I'm okay with the volatility. It's the smallest position on the account, but we're significantly healthy in that position. We're up like 30% over the course of weeks, guys, if not maybe a little bit more than a month. So happy with that position there, and Honest will come back soon. We'll talk about that in another video. Now, let's move on. So real quick, I want to bring up a chart of the S&P 500 on the day today. So this is from 6:30 in the morning Pacific time to the close at 1 p.m. All right. So we see here this big spike on the day, and this is right here when Fed Chair Powell started speaking at the Washington Business Club. Okay, we had some initial good comments, and then market processes, big drop, and then sort of like, reprocess and right back up on the day. So pretty healthy day, I would say, minus this big head fake here that we had on the chart. Definitely don't like to see those, but that's usually what happens when a Federal Reserve Chair speaks. Okay, and remember, this guy's spoken on two back-to-back weeks. Okay, and he's had a lot of chances to throw punches against the market, which he hasn't taken. So I think that you can start taking the narrative if you are a soft landing sort of bull, or believe in the bullish scenario of the soft landing, that the Federal Reserve is no longer your real enemy. They've done most of the damage that they're already going to do. They're not throwing punches anymore. They're not using their communications tools to destroy your portfolio. They're sort of just, they've been doing that for a year, most of 2022, and then all of a sudden now they're sort of, at the tipping point, sort of that capitulation point to start becoming more dovish. That's what we want to see, all right? Let's move on. So again, story of the day, guys, is Jerome Powell, okay? So I kind of did a little bit summary here of the interview, because the interview did have a lot of bullish and bearish points as well. It was sort of like a mixed interview, but there's many things that we know about here and some things that we don't, okay? And we'll start with the two back-to-back meetings over 2 weeks. Again, lots of chances for Chair Powell to really destroy the stock market. He hasn't taken those opportunities, and boy, man, in this meeting, if you hear this meeting, he had certainly the opportunity to do that, and he did not take it over and over and over, okay? Now, he's saying this inflationary process has begun, but it's got a long way to go. We knew that. That's already baked in, processed by the market. Housing and services sector not showing disinflation. Knew that. But that's all bearish, of course. And then they're going to keep policy restrictive at a restrictive level for a longer period of time. Already knew that. He's said that many times, all right? Now, he did say the labor market is extraordinarily strong. This is correct, okay? This is evidenced by the jobs report from Friday, which we'll hit in a little bit later in this video, okay? But the jobs report on Friday shows that the runway for the economy is large, okay? And that is a very good thing. And that disinflation has come without taking effect on that labor market. That is new, guys. That is new. That's something we have not heard the Fed chair say before, okay? That is definitely a bullish thing that happened. That's why we have the little bull right here, okay? Now, continuing rate hikes are appropriate. He said this over and over again. The bond market doesn't believe that when he says that, okay? Essentially, the expectation is 25 basis point hike in February, or actually in March, and then nothing else for the rest of the year, and possibly even rate decreases towards the end of the year and early 2024, okay? Now, we will make tentative forecasts, let the data come in. We knew that. Market processed that. Inflation target rate 2% won't change. We knew that. 2023 expected to be a year of significant decline in inflation. This is sort of new, okay? This is not new or old, but the way he's saying it is entirely new for the market. So this is definitely a good thing that the market is hearing from the Fed chair, okay? Now, we expect inflation to reach 2% rate late this year or early next. That's new as well, okay? That's a positive statement. That shows their dot plot, essentially, and where they think is going to land. So that's good info. Good to hear, okay? Shortage of workers needs to be addressed. We know that. There was also a lot of conversation about how immigration can help fill those gaps. But of course, the Fed doesn't work immigration. That's only a fiscal policy thing. That's up to the government, Congress, Senate, and the president to decide. They can't even comment on that, okay? Fed balance sheet looking huge at $8.3 trillion, but they keep shrinking. That's what you hear, or that's what's referred to as quantitative tightening. That'll keep happening, okay? The Fed cannot shield the markets from a U.S. debt default, okay? That's pretty important to know, that they can't really help on that end. That's all up to fiscal policy and government, okay? Funny thing, he makes $190,000 a year for a guy who manages a portfolio of $8.3 trillion. Man, $190K a year seems pretty low for somebody who so many people depend on. So I would vote that he make about $500K. That's what I would vote, that the Fed chair make $500K a year. That's just me, though. I'll put up maybe a poll on Instagram and Twitter. See what you guys think about what the Fed chair's annual salary should be, okay? And then supply chains improving, price of goods improving. We knew that. That is bullish. Okay, so that's it for the summary today. So pretty mixed sort of interview, very kind of laid back, not very official, but good information heard here in this interview for sure. So let's talk about the January jobs report. Okay, this is the non-farm payroll report. And again, like this CNBC article says, U.S. jobs report was stunningly good. I mean, it was shockingly good. I had a meeting last week with the Latin Chamber of Commerce here in Las Vegas, and we spoke to the top economist from UNLV, that's the University of Nevada, Las Vegas. And I asked the top economist, what did you think about this job report? And he said, I was shocked at the strength of this job report. I mean, we're looking at 517,000 jobs created for the month, when the analyst expectation was 187,000, which makes the unemployment rate fall to 3.4%, the lowest since May of 1969. I mean, unbelievable, the strength of the labor market. Okay, so that brings on the question, and something you'll be hearing about more often now, which is talk about soft landing. How about the no landing scenario? And again, we talk about that jobs report, and if you remember a couple of videos ago in which I talked about the markets and the expectation of the market for a soft landing. Okay, so we wanted essentially a sort of jobs report which was weaker than expected, not much weaker, but just slightly weaker, sort of that happy, slightly weaker category, so it doesn't damage the economy, or it doesn't show damage to the economy, but it keeps the Fed at bay. This, of course, was completely north of acceptable, way beyond past, a hot read. It was an extremely hot read on the jobs number, but that also increases the runway and gives leeway to the economy to fail a lot longer from today, right? In a lot longer time frame, and it gives it a lot more time for that inflation read to come down. So again, it's going to be about essentially CPI, right? It's Consumer Price Index. Every time Consumer Price Index, next one is on Tuesday. It's actually on Valentine's Day. Happy Valentine's Day for you CPI watchers. Okay, so when you watch the CPI, if that CPI number keeps cooling and jobs stay as strong as they are, we are going to see that no landing scenario. Essentially, inflation takes care of its own. The economy remains incredibly strong on very solid footing, and we take back off to all-time highs. That I have no doubt that that's going to happen if it rolls down that way. Of course, there's a lot of things that can go wrong between now and then. Ukraine, Russia, China, right? Balloons, lack of balloons, missiles. A lot of things can go wrong. Taiwan, for that matter. A lot of things can happen. But if nothing happens and the labor report keeps being strong like this, or even at expectation, we have a lot of runway for inflation to come down. A lot of runway, and we will have a no landing scenario, okay? If you guys have any questions about that, let me know. Now, later this week, tomorrow, we got Disney. We're watching Disney earnings tomorrow, okay? So we're watching for Disney Plus and the numbers. First quarter that Bob Iger is going to be back at the helm of Disney. We want to see if he comes out swinging, if he comes out talking about plans, who he let go, how he reorganized, right? We already know he did a lot of reorganization when he stepped back into Disney, so we're going to keep a close eye on that. I think that now with The Mandalorian coming out for the second quarter on March 1st on Disney Plus, we're going to see an increase of subscribers for Q1, right? Not Q4, which is what they're reporting, but for Q1 of 2023. It'll be positive for the Q1 numbers, maybe more Q2. We'll see about that, okay? And then on Thursday, PayPal, Topgolf, Callaway Brands, and Corsair Gaming reporting for our portfolio. We'll be watching for those as well. We'll probably do a video on Topgolf, on Corsair, maybe PayPal. PayPal's a little bit ways away from me doing a video since there's so much to go over. It's kind of like going over Visa and MasterCard. It's almost impossible to go over those since there's so much data there, okay? But if you guys want a video on PayPal, I'll be happy to do it. I've done one before. Let me know. Now, that's it for today's, guys. Investors, actually. That's it for today, investors. Let me know if I can help you in any way in your investment career or journey, whatever you want to call it. Hit me up on Twitter, Instagram. Peace out.